markets are bracing for a volatile week as it enters this action-packed period ahead of key U.S. data prints. To get across how that plays out, Peter McGuire, CEO of XM here in Australia, joins me now. Hey, Pete, nice to see you on this Wednesday morning. We've just had that inflation read here in Australia. Looks as if expectations for any rate cut, off the table for 2024, but in line with the RBA's forecasts expectations for inflation. So look, the trend is in the right direction, correct?
Well, yes. Good morning, Nadine. Lovely to see you. Yeah, it is in the right direction, but it's going to, as you mentioned, 24. I don't think you're going to see a Christmas present as far as rate cuts. So it'll be maybe in 25, or it might be even pushed further out. We'll just have to see how the calendar year of 25 trades. Volatility across all different asset classes, and then naturally, what happens as far as global inflation and so on. So, yeah, I think 25 is going to be a very, very interesting year. We've got, we'll know hopefully by this time next week, or maybe a little bit later, who's going to be leading the US, and that'll all change, I think, the market sentiment associated with that decision.
Yeah, well, I mean, where do we look? The US dollar has really been reflective of the so-called Trump trade. Is that correct?
Yeah, I would say so. I mean, a 104.20, bless you.
Thank you.
I've never done that on air yet, but it's something you've got to do. Well, now, 104.20 is US dollar index, Nadine. That's been pushed up and it's been very volatile. And I think, we got that 10-year yield running at 4.3%. It's just been showtime for all the bond traders. So US dollar index up, everything else is being pushed and really pushed quite severely to the downside as far as currencies. And you got a euro nudging 108. You got a yen sitting at 153 plus, and the Aussie sitting 65.5 sort of thing. So yeah, all of that is a consideration as far as what's going on with US dollar index yields, and gold now just shy of $2,800 an ounce. I just saw that on the screen. So yeah, it's a volatile time. Certainly.
Yeah, it is. But it does feel as if the direction for gold is sort of one-way traffic right now. It doesn't really, matter what happens. It's got pretty positive macro environment. Geopolitical tensions are sort of adding to the mix as well. So you're comfortable with gold where it is here, or do you reckon that we are vulnerable to some sort of a short-term pullback just based on news flow and all of the enthusiasm in gold already?
Yeah, I mean, Nadine, any market that rises this time last year or the start of October last year, you were running at, 1820, 1840. So there you are. It's up the best, nearly up $1,000 in that period of time. I've never seen a market like that across, a market like gold. I mean, precious metals. I put my mind back to even, 1980, 81. I don't think we've seen anything like this as far as the vol, and silver's up as well. So yes, you could see a wipe out of 100 or 200. I wouldn't be surprised. But when the market is so hot, everyone's piling in. Possibly you're going to see a pullback, but then again, you could quite easily see 3,000 by New Year's Eve. So at the acceleration you've seen from 27 to 2,800 has been nearly unheralded. So yeah, everyone's hot for gold, and the appetite's not waning anywhere.
Yeah, right. Now, are you buying oil on the dip, or what's your view?
I spoke with some guys on Tuesday, a conference that I was in, and they were based in the Middle East. Some are saying, Nadine, you're going to see $60 for WTI, and possibly even lower. Brent should be in that $60 range. Well, you've got $10 on that at the moment, but it's been sold off heavily. That war premium has been, absolutely eroded because of obviously the Israeli situation with Iran over the weekend was very much telegraphed, and that was in turn, everyone knew it was happening, flying over Syrian air zones. All of that played to stripping out that war premium, and it was down 6% Monday. So that really hit everyone between the eyes. So I wouldn't be surprised, a bit further downdraft, but maybe we're just going through this big whipsawing phases, up 7 or 8%, down 7 or 8%. Let's just see how it rolls. It's if you want a wild ride on commodities, Nadine, trade crude oil.
Oh my goodness, yeah. And I suppose one thing we need to talk about is the data still to come this week in the United States. We did have job openings last night. We get
Yeah.
jobless claims on Thursday. We get a PCE read followed up by the U.S. jobs report. I mean, these are big data points for the Fed.
Uh, yeah, absolutely. You know, if you look at, we'll start at the last one, NFP Friday, they're tipping 140,000. We had 250 odd thousand in September, so to be possibly a 140, but it could be, from everything I'm reading, it's really starting to hit as far as the labour market over there, Nadine. So you might be sub 100,000. It's too hard to pick what the numbers are going to represent. And also from a revision standpoint, are you going to see a revision for some of the earlier months as far as their reading? So there's the first part, structural weakness from a labour market perspective. Yeah, we're looking at PCE, we're looking at all those other, the job reports and so on. So yeah, that's a big 72 hours till Saturday morning.
Lots of opportunity for traders between now and that U.S. election. Safe to say, Pete?
Absolutely, Nadine. I think it's going to be, showtime, because you've got US equities at all-time highs just on it, gold at an all-time high. You've got crude that got crushed, bond yields 4.3% for the 10-year, US dollar index up, uncertainty across Japan with their election, which turned into an absolute, how do you describe it? So all of these factors are playing into the big macro theme. Yeah, hold on to your hats. It's going to be a bumpy ride.